Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show with Russell Walker on funding deals with none of your own money, and I am not including private money in this discussion. I'm Dan Breslin, host of the REI Diamond Show. Welcome to the show. If this is your first time checking us out, or if you are a returning listener, I want you to understand that I value your time and attention and promise that on this and all of the REI Diamond Show episodes, you can expect nothing but great content from people who are making money in the real estate investment industry in today's market. I do no sales pitch, no webinars, and I offer no coaching or no mentor programs. The lack of a coaching and mentor program disappoints some of my audience members, and I get approached at our networking events. But the truth is, I just don't have the time to effectively serve potential proteges in a mentor relationship. I believe the best way to get mentoring in the real estate business, especially the fix and flip or wholesaling business, is to find somebody with a high level of success in your market and bring something of value to the table. For me and my team, the best thing of value that someone can bring to our attention is a lead on an unlisted property needing repairs in which you have direct contact with the seller. We help people close on and, more importantly, get paid from real estate deals like this off market all the time. So this week's guest on the show today is going to be Russell Walker, a friend and fellow Chicago real estate investor and wholesaler. Russell runs a great networking group here in the Chicagoland area, and he is all about helping people getting started in the business. Russell has taught, literally, he's had to have teach about 100 people how to do their first wholesale deal. You know, the aim of Russell's networking group is similar to what I just talked about, where people bring him, you know, scenarios, seller leads, etc., and then Russell kind of holds their hand through the deal. It used to be primarily as a wholesale deal. Now Russell's business has grown to the point where he's developed this system for funding the deals, and so Russell is not only just teaching wholesaling to people in his network, but he's also created a method for people to get involved in real estate flips. And he is also holding their hand with that as well. So we're going to talk about all that stuff there. And like I said, we are not going to talk about private money as the main topic. So it's going to be a little bit of surprise for you. We're going to cover this and a whole lot more in this episode. So enjoy. All right, Mr. Russell Walker, welcome back to the show.
Thanks for having me back, Dan.
Absolutely. So that any listeners who didn't maybe catch your first interview, we won't get into kind of how you started in real estate again, and I will make sure that I post the last interview that we had, Russell and I did, it must have been almost a year ago now, somewhere around there. And our businesses have grown, both of our businesses have grown in a great new direction since that point in time, which I'm excited to talk about. But I will make sure to put that link back to your show, so any listeners who want to go back and figure out kind of how you started and, you know, hear chapter 1 of Russell Walker, I'll make sure that's available. Cool. So Russell, I know you have some improvements. I mean, let's start off with, you know, what your business has evolved into over the past, you know, months or year or so since we last talked on the show here.
First, I want to thank you, Dan. I mean, all the awesome podcasts. I've been listening to a lot of them, and it's just been amazing. Great content, great interviews, and I've been to a couple of your meetup groups. It's been awesome, you know, networking with you, meeting you and your other investors at your meetups too. How are you evolving? We're getting more into rehabbing and buying holding properties, basically partnering with people and teaching people how to get the money, and then we would partner with other investors, or we would actually teach our buyers on how to get the money. It's basically how to get the money without using any of their own money, and they can do more deals from us, partner with us, or they can buy more deals from us. So that's our goal, is, you know, buy more deals or flip or rehab more deals or buy some more rentals. So
So you're kind of transitioning from, I know you were buying a lot before and then you started wholesaling, but it looks like you're starting to do a little bit of a transition from wholesaler to buyer, certainly in like your entire guiding philosophy. And it sounds like that's what you're kind of teaching to people who come out to your meetup group also, which is also a top-notch quality, pitch-free zone that's well worth checking out. I'll make sure we put a link to that in the notes as well. So can you talk about that shift in philosophy from wholesaler to buyer? Because I know so many investors like get started, Russell, and they have not a lot of cash or no money at all, or they're working a 9-to-5, paycheck to paycheck, and it's like, I know for me, my fear or my hesitation and procrastination, my reason for not getting started right now was I got to save up $30, $40, $50, $100,000 in cash so I can go out there and take advantage of buying, a property that was in foreclosure and do the renovation, the old-fashioned way. So can you kind of talk about that transition and what you're teaching people?
Yeah, so brand new people that haven't done any deals, we teach them fundamentals of wholesaling, how to evaluate the deals. And at the same time, we're teaching them how to raise capital and build capital, ways they can raise $100,000 to $200,000 in capital without using any of their own money. That way that when they do get these deals under contract, they have the ability not to just wholesale it, but to also buy it themselves if they need to. And the way we're teaching them is basically building business. There's a lot of companies that you can pay for them to do it for you, but we're teaching them how to build business credit cards, building business credit lines of credit. So they're taking that money, getting a 0% interest for about a year, and they're using that. They're either going to buy the property cash or they're going to use that as the down payment to obtain a hard money loan. And we're not only teaching the new investors that, we teach our any buyers that come to us that as well. And the new investors, we're trying to make them buyers too. So that way, we're trying to build a long-term relationship with these buyers. If we teach them how to get the money at, the free, pretty basically it's free money at 0% interest that they can use. If we teach them that, and hopefully they'll come back to us. Obviously they find their own deal, buy their own, but we hope they come back to us and become repeat buyers for us teaching them that.
Yeah, and I think that's so critical for people. So I know, like, when I got started, I had walked into, actually it was the Ring meeting back then in 2006. I met a couple people, one of which I've had on the show, Dave Van Horn. I can link to also that episode for people who are listening and wonder who Dave is. Dave was like a mentor to me early on, and I remember, and I know you do the same thing for people, Russell. That's why I'm bringing the story up. But he was very generous with, giving his time and helping people get started. And, like, honestly, Russell, I had to get a ride to my first Ring meeting, my first real estate investor networking group back in Philadelphia in 2006 by my dad and dropped off there because I didn't even have a car at the time. So it was like, I guess it's a little cliche, rags to riches or whatever. But Dave took the time. I mean, I don't know that he knew my background or my situation, but I was like 26 years old. I had no job at the time. And Dave took the time to go out to lunch a few times and, answer my phone calls and give me some pointers here and there. He had even, kind of assisted me with a couple of my first wholesale deals and bringing buyers and things of that nature. So, I encourage people to come around to those groups. And the same way that Dave did that for me, and I do that for people at my meetups and everybody on my team in Philadelphia and here in Chicago, we all do the same thing for people to come out to the meetups the same way that you do, is we try to be giving of the knowledge and the information. And it's not like we can expect, Russell, each person that comes through, like we're going to get every single person to buy every single deal through us. But, a lot of the goodwill that you give, on the front end. So like, a person might do hundreds of deals, but if they did, 5, 6, 7, 10 deals over the next 5 years with you, I'd say that's like, it's well worth it from your perspective to have plant those seeds and help people out. And then, the other people, I know personally, I felt like somewhat endeared to Dave. So I've always tried whenever I had the opportunity later for him taking that time out of his day and kind of giving me that information. Like, I'm shooting him deals if I know that he buys in a certain area. I'm calling him first on a deal because I know he likes a certain neighborhood. And there's a couple other people who are the same way. And, so like from both sides of the coin, it's just a value-added proposition. And, I don't think people should discount that. I think it's a good thing. It's a good strategy. I know a lot of people around the country that work that strategy effectively. So, I mean, Russell, it sounds like you're literally...
It's just a, universal law of success. If you help someone become successful, whether they're going to help you earn more money in your business, it's going to come some other way. It just comes right around some other way.
Yeah, absolutely. Absolutely. So it sounds to me like you're literally building an army of new investors that have the buying power. I mean, it sounds like you've made a decision to do this. Has this actually started to happen? Have people been getting these line of credits and these, hard money loans and literally doing this with you lately?
Yeah, I started teaching it about 3 months ago, and I don't know why I haven't taught it sooner, because that's actually how I got started. Where I was able to do multiple rehabs at a time. But about 3 months ago, we probably raised well over $1 million in capital of investors that can have buying power now. So definitely, and we basically partnered with quite a few of them where we're actually doing the rehab together, or we're doing like a buy and hold together. And we're just splitting the profits 50-50. My company's not coming out of pocket with any money. They're not coming out of pocket with any money. So it's a win-win for both of us. Nice.
Let's dig into one of those deals for me. I've always found personally, like, I don't like owning rentals long-term with other people. I feel like I have, a certain level of attention to detail and maybe the other partner doesn't, or vice versa. And it feels like over the long haul, it just seemed like one person was always taking more of the phone calls or more of the responsibilities. So I was never really a big fan of like putting together large scattershot rentals. With a flip, I like partners on flips or wholesales, like a little bit short term. There's only so many like partner defects that will pop up in a partnership for me in, let's say, 6 months when we're flipping a house, or 7 months. There's only so many challenges or so many risks, and like we kind of get some conclusion. I always like to have that like end of the deal. We're wrapping it up, and there's like an accounting and a disbursement of the money. And I know I've been through enough partnerships too, Russell, where the responsibilities of each partner are sometimes not delineated up front, and it causes some contention, and one party's feeling like, they got the short end of the stick. And I'm sure you probably dealt with some of these challenges. Do you think you could talk about like maybe one or two of these deals and like exactly who did what, who ran the contractor, who brought the contractor, what active role you took, and so on?
I got to sit down and talk to the person first before I partner with anybody, and we have to have the same end goal in mind. What we're buying is we're buying properties that 70% of after fair value minus rehab, the cheaper the better. But it also has to make sense for buy and hold. It also has to cash flow at least $800 a month to $1,000 a month. If it doesn't meet those two criteria, then we don't look at it. So me and the partner would have the same ideal as far as it doesn't matter if we're going to hold it or if we're going to sell it. So they have to be okay with holding it for long term. And if they're not okay with that, then I'd say you can go find your own deals. That's the only deals I'm looking for is something I could, it doesn't matter if I'm going to hold it or flip it. Either way it makes sense.
And is that like as a risk mitigation? So if the market shifts and you can't sell the property, you can then rent it out. Is that what is the thought process behind that?
Exactly. Yeah. I mean, some deals we go into it, we just immediately say we're just going to hold it. Some deals we go into it and we say, let's put it on the market for 4 weeks. If it doesn't sell, then let's rent it out and then refinance.
Who actually runs the construction at the property?
Well, I have a couple of project managers that will run it, and then I have a couple of general contractors that have multiple crews, 4 or 5 different crews that are running each job.
So are you the one who kind of takes point on that, or does the partner have to visit the property, give you pictures? I mean, what process or who is more responsible for the construction piece?
The project manager is the one taking care of everything, but the partner, can go as many times as he wants. For myself, I've done a lot of deals with these same contractors, so I trust them. But the partner can go in as many times as they want, inspect, and make sure they're doing everything right. I trust these guys, so I don't. I'm kind of hands off on it.
So the project manager kind of takes point, handles the punch list, gets you literally ready for somebody can move into the property when they're done, and there's no other issue then.
Right.
Who does the accounting for the deal and operates the money and cuts the checks?
That would be handled by me. I handle the money part of it.
So you're the one that puts together, like all of the expense report and does the distribution at the end, just track everything, right?
Right.
Do you literally do that, or do you have an assistant or an accountant that kind of helps you out with that?
I'm currently doing that, yeah.
What are some of the biggest challenges of buying and selling property? Like, you kind of have covered a lot of the risk because you're the one stepping in to manage the construction, because you have this team of project managers, which a lot of people who are getting into the business and who are listening to this episode right now don't have that luxury. So what are some of the biggest challenges that you've run into in building your career to this point, Russell? Like, to the point where you don't have these same problems, or what are some of the big problems you've had and how did you solve those?
The challenges that we're facing is the subcontractors. We need better, we need more and better subcontractors. We're always hiring and firing. We fire pretty fast, but yeah, we need more subcontractors since we're doing more and more volume. So that's the challenge right now we're facing. We're getting new guys, but they don't work out, and you have to find another guy. So, and the best guys we try to definitely keep on, but you can do so many rehabs, and you're always going to run out of guys if you keep doing more volume.
Can we talk about maybe like some of these ideal properties? Are you buying like duplexes, triplex, 3 flats? What price point? What do these units rent for? Or are these single family houses that are actually cash flowing $800 a month? Can you just maybe talk about like what the product is for people around the country that are listening that don't have?
It's a mixture of single families, duplexes, triplexes. I mean, I've done some condos. I mean, it's just whatever cash flows. Like we just bought a deal in Evanston last week, and it can cash flow at $800 a month. It's a single family, but then it also made sense for a flip, so we decided to take that one down. So even a single family, if you get it at the right area, at the right price, you can still cash flow $800 a month. What we do is we do rent with option to buy. So in that scenario, you can get a little higher rent than normal. And we factor that in when we're analyzing the deal before we buy it.
Would you say that it adds another $300 a month? I mean, are we talking like, normally an investor would go in and they would expect to make $500 per month cash flow above all their expenses?
It depends. Like, for example, we may ask for like a $15,000 down payment. There may be a guy that comes in and only has $5,000, but we know he's a good buyer. He can qualify within a year. We may take the $5,000 and take the $10,000 over payments, and we add it on top. So I have some rent-to-owns where they're paying $900 extra a month, $800 extra a month. It just it depends on their down payment. If they have it, we can collect it over payments.
On the projects that you own as rental properties, like, are you creating LLCs with each of these different partners, or do you kind of maintain the company control of each of the deals?
Yeah, so what we're doing is, especially if we're going to just hold it, we just have a new LLC open. If it's with a new partner, if we're just going to flip it, depends on the partner. I like to keep it in my name, but if they want to. We have like a separate agreement, and sometimes we keep it in my own business name. And we'll have an agreement we record on title that, he's 50-50 partner. Sometimes the partner will just both go on the loan, the hard money loan together. We'll both be on the deed. It's easier if I do it myself. It's easier and faster because I already have that, reputation with the lenders. If you get another person involved, it may take a little longer to close. But it depends on the partner, how we structure it, and what we agree on.
So does this get to be like, tax time, Russell? Do you have like 25 different, you have, I think, 74 rental units is what you said. Do you have literally like 30 tax returns that are being filed for all these different LLCs?
Yeah, I mean, I try to put at least $400,000 equity in each one. It's around I think I got like 12, around 12 of those separate ones there. So it's a little difficult to manage for my account.
Nice. So your business has shifted, and I know we had spoken, in between the episodes here. You're doing a lot of direct mail and stuff. I mean, where are the deals coming from these days, Russell?
A lot of it is coming from new investors bringing us deals. We teach them, the process, and then they go out and do their own direct mail or bandit signs, and we partner on the deal. We'd either wholesale it or purchase it ourselves, and then the other half comes from our own marketing, where we do bandit signs and direct mail ourselves, and a lot of realtors send us a lot of deals that make offers for us through the MLS. We get quite a few deals off the MLS too.
I see your price point, at least from what I've seen, the price points seem to be going up. Are you making a conscious decision, or have you decided to focus on more expensive properties, Russell?
Yeah, I mean, especially with a wholesale deal, you can get bigger spreads when you're at a higher price point. We have a deal in Lincoln Square that has a spread of $40,000, so you can't get those in the lower end areas. But we're focusing on the higher, when we're doing our direct mail, we're focusing on, maybe north side Chicago. We did start hitting downtown Chicago with these condos, but north side suburbs, we focus on the probably 200 and up purchase prices with our direct mail.
Nice. And did you, we didn't talk about the purchase price, but on the flip properties, can you just run through so people around the country get an idea of price points of all these deals? We mentioned higher numbers, but we didn't really give exact numbers. Can you maybe run through some of the deal details of something you've done recently?
Yeah, I just did one in Portage Park. It's a single family in front, coach house in the back. We made an in-law unit in the basement. We bought it for $150,000, and we put about $86,000 into it. And our resale price is going to be about it already appraised at about $350,000. So that deal, if we held it, it would cash flow each unit. First floor unit can rent for about $1,200. The basement can rent for about $900, and then the coach house can be about $1,200 to $1,300. The coach house is actually nicer than any other units, and the cash flow on that would be about $1,500 to $1,800 a month. What we're going to do with that one is we're going to try to sell it for around $350. If we don't get a buyer within maybe 4 weeks, we're going to look for doing a rent to own. Maybe one big family, because it's just, there's a lot of Spanish people in that area, so it's a good area for a big family. And with rent to own, we can probably get a little higher, maybe $1,800 a month total cash flow after all expenses. And what's great about it, rent to own, is that it's fixed. It's not like it's going to fluctuate, because they're going to be taking care of the maintenance and the repairs on the property, not ourselves. Do you focus on higher price points lately, or is this an average deal as far as the stuff that you would keep as rentals? Because I think Portage Park, is a little better area maybe than Southside Chicago as far as rents go and things of that nature. Yeah, I do have a couple that are going on in the Austin area. I mean, for me, it's just, does it make sense to hold it, and does it make sense on a flip? Does it have the equity in there? If those two meet, then we look at purchasing it for ourselves. But we for example, the deal in Evanston we just bought, I had about maybe a $40,000 spread on it, but I put it out there and I said, if no one takes this at asking price, I'm going to take it anyway. So we did get offers on it where it was maybe a $15,000-$20,000 spread on the wholesale. So a lot of these deals, we put them out there as a wholesale first, and if 2 weeks go by, we don't have anything, we look at it as purchasing it for ourselves. Now, what about for new investors? Do you think it would be smart, or do you have a method for, say, doing 3-4 properties at one time, and then using the leverage strategy with primarily, I think you had mentioned, Russell, that you're primarily using hard money company combined with business line of credit, which is unique. Most people are trying to run out and find private money, all that. It seems to be the big buzzword, but I didn't hear you mention any of that. Correct me if I'm making the wrong assumption that it's mostly hard money and business lines of credit that you're funding. And I kind of asked two questions there at one time. Yeah, we teach that, if you can raise private money as well, that's a good source as well, rather than hard money. But we also use a lot of private money for our deals. But if we run out of that private money, we turn to hard money, and definitely the credit lines. And the hard money is not really, in my opinion, it's not really expensive. I can get it at 3% up front. I can get down to 2% sometimes, depends on the deal. And then and get the interest rate all the way down like 9% to 8% because I've done so many deals with this one company.
Do you want to mention them or no?
Well, we broker for them, so if anyone wants to contact us for that source, we can help them out.
So what kind of down payment will be, let's run through the structure of doing 1, 2, or 3 deals using this hard money strategy combined with a business line of credit.
So example, the deal we did, Forge Park I was referring to. So we bought for $150 for the 86 into the rehab. So the out-of-pocket expenses on that were about $60,000, and that's to hold it. I mean, for like 6 months total. That includes monthly interest. That includes the utilities, holding costs. We factor that in up front. Closing costs. So everything, that $60,000 will cover everything from the purchase to 6 months. If we had more than 6 months, then it would be a little more. But our goal is to be in and out in 6 months. So I would need a $60,000. So my partner, who partnered with me on it, got the business lines of credit. He pulled off a $60,000. He already had really good credit himself, so he got it himself. If you don't have good credit, I mean, there's always someone that does that's willing to partner with you or willing to help you out to co-sign for those cards. So that's just an obstacle that anyone can get over. It's just finding someone that does have good credit that's willing to work with you. But he pulled out the $60,000 at 0% interest. I think we've had the deal for about 3 months now, and we're ready to just. I think he wanted to just rent to own it. We were marketing it off market. We didn't put it on the MLS. So we're probably going to look at rent to owning and just holding on to it and making $900 each month on this one.
I mean, I don't do a lot of rent to own myself or rentals for that matter at this point. What do you expect? You expect to find somebody who's going to bring, let's say, $1,200, $2,400, $900. So, like, are you expecting some extended family to kind of pool the money together on that deal, Russell, and be at $3,300 to $3,500 per month for like all 3 units?
Yeah, I have about 15 buildings like that where it's 3 unit buildings where it's rent to own right now.
To one person.
To one, like one big family. Meaning like they'll have their brother upstairs or their grandma, grandparents. So it'll be like one family that wants to be together.
How about that? It's like a little bit of a niche you've kind of discovered there, huh?
I'm sure other people are doing it, but yeah, I mean we've been doing that for a while, yeah.
What kind of a deposit would you expect to get on that property, which for anyone that was listening, it was $350,000 appraisal. So what would be the down payment required on that?
So that one we would be looking at about a $20,000 deposit, and that area is Spanish. So I mean we know there's a lot of Spanish families that save up a lot of money. So and if a qualified buyer comes in and let's say he only has $5,000, but we can see he can get the loan in a year if he just does a few things to fix his credit, we'll take the $5,000 and just take the $15,000 over payments. And maybe charge that $15,000 10% interest. Got
it. So it's like a little bit of an additional asset you create there on the way in before you guys cash out completely.
Right, and it creates more cash flow every month. If we just got 20, then it'd be less cash flow, but more money up front.
Have you had success getting the refinance and using that financed down payment money as a legitimate credit toward the eventual refinance or cash out or purchase? Have you gotten to that point on any of these deals yet, Russell?
Yeah. There's a lot of lenders that understand, how rent to own works and everything. So they do get credit, the total down payment, and any credits we give them, we usually give them like $100 credit a month or $200, just to make sure they pay, if they don't pay on time, then you don't get that credit. So just to make sure that they pay on time, we do give them a little bit of a credit.
Nice. How did the Portage Park deal come together? Was that found by the partner who you have on that deal?
It was an REO that a realtor made an offer on it for us, and then we purchased it from him. So we have like a few realtors, 2 of them that are, we show them the formula, how we make offers, and we tell them what areas they hit, and they're just, looking all day for us for properties.
How many offers do you think you got to make on the MLS to get one? Because, you know, the common thinking is that the MLS really doesn't have a lot of good deals, and you've kind of found that to be the opposite. I know from experience with you and what you've mentioned on our episode here. So, you know, how many offers do you make for each deal that you get, Russell?
On the MLS, it's about 100 to 1, probably a bit more.
Wow.
Yeah.
100 offers for each deal that you get.
Yeah.
Wow. What do you look for criteria-wise? I mean, are you guys just kind of like bouncing out offers to every listing that's out there, or is there a certain thing that kind of makes sense that you're looking for?
So we have like, you know, like top 20 zip codes that we're targeting, and then we would target by, basically what we do is we sort by lowest on the market, because, you know, if we get it under contract even cheaper, then we're lower than everybody else. So we sort first by lowest on the market, and then we hit offers, maybe 10, 20 deals in each zip code, and then we, you know, the realtor would just go around to each zip code every day, switch which zip code he's going to make offers on. You
guys aren't looking at every one of these properties, right, Russell?
Oh, no. We just look at them if we get a hit. Yeah, like, for example, if someone counters and maybe we're 10 grand off, we'll go inspect it right away.
We had one of the Philadelphia guys, his name is Jim Zaspel, come on the show a few months back, and he is primarily, or at least he was when he was, you know, a few months ago, 3-4 months ago when he came on the show, his primary source of deals is the MLS, and he had a really unique system and strategy for finding and making the offers on them. He found his experience to be, Russell, and maybe this is like a tweak you would try out here. I don't know if it would work the same in Chicago, but like, as an example, when I have a property on the MLS myself and someone comes sight unseen and makes an offer, the first words out of my mouth when we get an offer are, did they go see the property? And then my agent's like, no, we didn't have a listing scheduled from this agent. And I said, okay, well, I'm not even going to consider that offer. So I just toss it out. I don't even consider it. Whereas if they did go see the property, then I might engage in a negotiation with them. I might give them a counter offer, and we kind of can get that, you know, that process started back and forth. So I just disregard the blind offers altogether. And I know a lot of people do who have REOs and, you know, a lot of inventory out there. So Jim, his agents, he had a really specific model. It wasn't just zip code and price. He was actually flipping houses. I think he did like 38 houses himself last year, not with many partners other than his wife. He would have these, you know, 4 or 5 agents go out, and he would have his automatic searches set up. So he's getting these emails every day, and he will give a brief look at the listing and decide, yeah, this is something I want to go after. This isn't something I want to go after. And it would be something that he's looking for. REO, needs some work. It's been on the market. It went back from pending to active again, so it was reactivated. And then he would forward that email to his agents who were going to make the offers the same way that you did. And their job was to go out, take a video of the property, and then send the video back, and he would give them the offer price based on the video. So he was spending a lot more time on the front end, but I think his success rate was somewhere in the 1 to 10 range the previous year, and I think it was in the 1 to 20 range lately. So as inventory's gone down, that MLS the effectiveness and the amount of work needed to find a deal, I know for him, has gone up. I guess you probably experienced the same, right? I mean, if you started even 8 months ago, the inventory is much lower now than it was, 6-8 months ago. I mean, have you found that to be the case at all? Or?
Yeah, it's a lot harder to find deals off the MLS in the Chicago area. What we do is if they tell us, did you inspect the property? We just say something like, yeah, we drove by it and looked through the windows and everything. And usually they'll come back and counter after that. But we don't sign a contract until we actually, after inspecting it, make sure the numbers work. If the numbers work, and then we go and sign the contract. And also another thing we do is we hit all the pendings as well. Like every pending that's pretty much like the lowest on the market, we'll call them up and tell them, hey, if your contract falls through, let us know. We want to be a backup offer for this property. We're very interested. So we get a lot of deals where, during inspection periods, just the finish and, the buyer's backing out, realtor knows it and gives us a shot at it without it showing as available on the market. sometimes we take a look at them.
Yeah, I'll tell you, my experience coming from Philadelphia to Chicago, these attorney review periods of 3 days, 7 days. Philadelphia is not an attorney state, so you go to the title company and very few people bring an attorney into the transaction, whereas here in Chicago and Illinois, it's ruthless. Everybody brings an attorney. It's like very unusual for somebody to show up and not have an attorney, right?
Yeah. You have to have a good attorney here, that knows what they're doing, or else you're going to lose a lot of deals.
So a lot of deals fall apart in the attorney review period. And when I first got here and started doing deals, I'm like, no, there's no freaking way. We're not letting them have an attorney review period of 3 days. That's crazy. But now you're right. It's like every deal has to be sold twice. You got to do the deal once, with the buyer and seller. And then the second deal is done like with the attorney's input in there. And I'd say like, I don't know, 20, 30% of deals that in my experience, I don't have hard numbers. I didn't track that. But the fallout rate is just outrageous in Chicago here in this attorney estate. And I know that Atlanta has attorneys as well, but that market's just so red hot that people are willing to forego having the attorney review period or the deals don't fall apart as much in the Atlanta market. Let's talk about how you make that offer, Russell, because I think it would be important for people who are kind of, you get into business and you hear that, oh, you need to make 100 offers to find your first deal. And I said, okay, fine. And it was like offer, 8 or 9, and I got my first contract. I'm like, cool, I'm a little ahead of the curve. I think I found something here. But what do you do on the contract, Russell, right, when you're presenting that? Are there items or special things you're putting into that contract to try to make it stand out? Because you're going in on price and your price is low. And what can you do to like mitigate that? What important pieces do you do, deposit amount, inspection, et cetera, to kind of help the seller pallet your offer?
So we tell them it's cash. Typically for closing in about 30 days, buying it as is, and we're paying all your closing costs. Typically that we still do per like a attorney review inspection period in there, just just in case we miss something that we inspect and it's not going to work. That usually takes us over other offers. I don't think hardly anyone's offering to pay all their closing costs and buying it as is. Nice.
Do you use a large deposit amount?
It depends. But typically we're putting $1,000 on earnest money, and sometimes we'll, if it's a really good deal, something that we would purchase if we're not going to wholesale it, we would put down $5,000. Usually the most would be about $5,000.
And what's the average prices of these places? You're talking like $150,000, $200,000 list price?
I mean, it's all over the board. Depends on the area we're making offers on. I mean, we make offers in the Austin area where it's for $40,000, $30,000, all the way to Glenview, Northbrook, where we're offering $300,000 for a prop.
100 offers. Is that in a week, a month? Is that happening every day? I mean, what do you think your rate of making offers is for these deals?
I think we give out 100 offers out maybe just from our realtors, maybe every once a week. Yeah. And I mean, it's becoming a lot more work for them because, less inventory. So I'm trying to teach them how to get offers other way and get deals other ways. As far as I'm actually teaching the realtors how to do direct mail and banning sign and stuff like that. So
getting them to generate some more off-market stuff themselves, right?
Yeah, because they know it's drying up and it's getting hard. It's becoming more work for them.
It's cool. So, Russell, I know that you are a well of knowledge. Like I said, like you mentioned earlier, I've been to your meetups and you have great information. I mean, things down to like psychology of how to, get in there and negotiate good deals and the list goes on and on, down to some of your time management strategies. And I have to ask you, have you read, any books lately that you'd want to recommend to me or my listeners?
I read the book, The 4-Hour Body. It's just, I spend a lot of time in the gym, like maybe hour, 2 hours, sometimes 2 hours in a day, 4 times a week. So 4-Hour Body teaches you how to, basically cut down the gym time. Basically now I'm working out maybe 40 minutes twice a week. So, just save time, and there's other strategies on how to sleep less, and you can go from sleeping literally like 2 hours a day by taking naps throughout the day. So I haven't started that process yet, but that would be cool. 2 hours a day. And imagine how much work you can get done, you know?
Yeah. So that's what you're seriously considering shifting to that sleep regimen?
Well, I mean, I was at an 8-hour-a-day sleep regimen. Now it's down to 6. And so the strategy is supposed to be to go down to 6, maybe, and then when you go down to 4, you start taking a nap or 2 a day, and then you go down to 3, and then start taking 3-4 naps a day, and then the strategy is get lower and lower. But I'm still stuck at that 6 right now, so I'm trying to work my way to the 4, and then taking maybe a nap or 2 during the day.
Yeah, I mean, it's funny. I also read that book. Actually, I listened to it on Audible, and I dropped 25 pounds in like a 45-day period myself. So I was like thrilled with, just that. I honestly don't even remember them talking about the sleep. I probably completely – actually, as you mentioned, I'm thinking, oh, yeah, he did mention that. And I remember thinking, nah, I'm good with 8. I like that, my stress level is pretty good. So I'm not even going to consider that. I tried, I think I might have given it like a half-hearted try. And I'm like, well, yeah, I'll cut it down to 7 or 6. And it seems like for me, it's like I took it like a credit card. And so like I'll do that. I'll do 6 hours a couple days. And then like all of a sudden, third, fourth day, I hit a wall. And it's like I have to all of a sudden I have 10. Like I keep hitting the snooze button or something. And it's just 10 hours. Like my body goes on a strike and I have to catch up. It's like so I've kind of like surrendered to that piece. But I did get great results out of that book. That was a good one. That's by Tim Ferriss.
Yeah, definitely awesome book to read. I read some books of Tony Robbins on money mastering. Basically, it's about it's investing in the stock market. It's crazy. Like if 2008 when the market crashed, I think everyone lost 50% of everything they made. But if you left it in if you didn't take the money out and you didn't get scared, you in 3 or 4 years you had that money back and some. It's basically just investing in the long term for the long term. That's how I look at the rental part of it, is just investing for the long term. It was a very, really, really good book to read on how to, save money and how you look. It makes you look at money differently. You look at $1 and it's no longer worth just $1. It's worth $10,000 in 10 years from now.
That was Money Master the Game, right?
Yeah, Tony Robbins.
Russell, who is if you had to choose the most successful real estate investor or developer that this could be somebody that's alive, dead, them publicly, them personally. You can even mention them by person and not their name if it's somebody who wants to remain anonymous. But the important part of the question is why you look up and believe that person is successful in real estate investment.
Maybe the guy I learned most of my strategies from is Sean Terry from Phoenix, Arizona. He's how I got started, and he motivated me to get started into wholesaling and flipping houses. He's not the biggest rehab or developer. He mainly does wholesaling, but everything he does, everything he teaches, it's just amazing how much he gives for free and how much he's getting in return for everything he's doing.
Nice. If you could share the crown jewel of wisdom with your 18-year-old self, what would that be, Russell?
Basically, where you're a new investor, you don't have cash. Like I didn't have cash. I didn't have maybe any good credit or any credit at all at that point. But anyone can get into real estate today, and they can raise $200,000, $300,000 in either private money or building business lines of credit. And in a year, 2 years from now, you can end up owning 10, 12 rentals, done 20 flips. It's just a matter of being. It's just an obstacle. If you're starting today, you don't have any money, you have bad credit. Find someone that has good credit. Find someone that does have money. And if you just give up because you don't have it, then you're never gonna amount to anything. With my business, I don't do anything on my own. Everything's with partners. Everything's with other people. So if you're a brand new investor, just imagine having like maybe 5 people that that have good credit want to get into real estate. Maybe none of them have cash, but they all have good credit. They want to get into real estate. You can raise $500,000 from 5 people alone. $500,000, you can do a $200,000 purchase and rehab you probably need to invest about $50,000. So you can do 10 of those. You can literally get in and do 10 rehabs at one time with $500,000. So it's just an obstacle that any new investor can overcome, and they can overcome that not in years, in weeks, months, and they can become a buyer, and instead of just trying to wholesale, they can actually be an actual buyer and purchase any property they come across. And I suggest any new investor start building their capital, start building, private money, start building business lines of credit, business credit cards, so that you're able to actually purchase properties now instead of just trying to wholesale the properties.
Yeah, that's great. And I think we sort of talked about that in the beginning, and wholesale is how I got into the business. And I think if I had to share the crown jewel of wisdom with my 18-year-old self, knowing where I was when I was 18, and I remember like having the dream that just seemed so far-fetched to get into real estate. I remember like saying it out loud to a couple people, and I was like, it seemed like it was weird. It was like, because it was in my future, and it was like part of where I was going. But at the time, it was like absolutely unbelievable. And it was for that same reason in the beginning of the episode that I shared for me, Russell, and it was that I didn't have the money. And so like my goal was, if I could save up the money, and I just didn't seem to be able to do that for like years. I never, just never figured that part out. And I think if I could share the crown jewel wisdom with my 18-year-old self, I would have shared, hey, you can become a valuable member of the real estate community by becoming a source of deals. If you can go out there and figure out through bandit signs, through MLS, I have people with Craigslist who found ways to bring deals to the table. If you can go out there and be a person who negotiates good, solid, profitable real estate deals, you are a valuable member of the community, and people with cash will sit up eventually, take notice, either buy the property or partner with you on the property. But like for me, even to this day, like my success rests on my ability to find deals myself or coach people around me to find deals. I mean, that's where I bring the most value to the table. It's like for me, wholesaling is like the apprenticeship for real estate investors. That's kind of like what I believe.
Yeah, and I tell everyone, get the fundamentals down of wholesaling first. Understand, what's a deal, what's not a deal, how to analyze the numbers, and if you get good at that, that's when you can start looking. At the same time, I'd say build capital, but once you got a good deal, you can take it down. I'm also teaching this to my end buyers too. So if an end buyer comes to me and say, hey, I have $100,000 cash, I want to buy properties, we say, why don't you have good credit? Do you know someone has good credit? Why don't you build business credit? Because I go on every property and I say, how can I buy this property without using any of my own money? And I teach that to the buyers too. So I say, hey, listen, like, why would you use your own money when you can get $100,000 at 0% interest that you can use, and you can do multiple deals instead of just one or two. You can do maybe 6 or 7, So just teaching that to an end buyer, that's also building our wholesaling business, and we're doing a lot more deals because of that. One buyer is buying 5 or 6. We can do 5 or 6 at a time rather than just 1 or 2. So we're also teaching them how to build their business credit if they're open to that information from us.
Nice. So if anyone's listening and wants to get some more information about you, from you, et cetera, wants to reach out and kind of get in touch, do you have some contact information or a website that you'd like to share where people can find you, Russell?
You can reach me at my phone, 773-231-7405. And my website is bestchicagowholesaledeals.com. All my information you can find on there too.
Nice. Yeah, and if anyone's looking for deals, obviously you can go to that site, and Russell probably has 15, 20 in inventory minimum at any given time?
Yeah, right now we have about maybe 25 available.
Well, that about wraps it up, Russell. I really appreciate you sharing, a lot of the information here. I know I get very specific with some of my questioning, and I thank you for being a good sport and playing along with me and answering the questions, because I think it shares a lot of great information and really gets people who are listening to understand what's helped to make you so successful. So I appreciate you coming on the show, Russell.
Definitely. Thanks a lot, Dan. You're doing an incredible job, man.
Cool. Thanks, man. Thank you for listening to this episode of the REI Diamond Show. Have you recently noticed that you're not receiving the weekly episode updates in your email anymore? That's on purpose. In order to cut down on the number of emails that I am sending out to my buyers list in each market, I've decided that I am only emailing select episodes to each market. Because we send out so many deals, we're showing up in people's email box, 6 times a week, 5, 6, 7 times a week. And we've actually had some complaints about the number of emails. So because I respect your time and attention, I've decided to cut down on the number of emails that I'm sending out to you each week as one of my buyers. But you may go literally weeks or even months without seeing another REI Diamond Show episode email unless you've signed up at www.reidiamonds.com. You'll also receive new episode notifications automatically if you are subscribed through one of the podcast apps such as iTunes, Google Play, or Stitcher. Separate topic, if you are looking for super cheap, super profitable deals on real estate in one of our 4 major U.S. markets that we currently operate, that is Philadelphia, Chicago, Atlanta, and the Tampa Bay region in Florida, you can check those deals out by going to www.reidiamonds.com and clicking the Available Deals tab at the top of the page. And you can also submit deals you have for sale there as well, whether that's a property you have under contract, whether you're a real estate agent with a deal you think that I can make a profit on, or as I had mentioned in the beginning of this episode, the best way to be mentored, quote unquote, by my team is to bring seller leads to the table so that we can work the seller lead together and get the deal to closing. Whether I buy the property myself or whether that doesn't fit, maybe we wholesale the deal out, we can work together. Imagine having somebody, or a team rather, that's literally negotiated and closed 600 deals off market, stepping into the living room with you and the seller and working out a win-win deal which actually closes and you actually make money from. That's basically what we do with our referral partners in each of our markets. And we have a select few individuals who have, submitted leads and developed a very close working relationship to the point where in some cases they send the lead and they no longer have to even come out to the living room. So that can be a great resource if you're just getting started or you have other leads in the markets where we are that you're not doing anything with. So if you are interested in submitting deals you'd like some help with, or you'd like me to consider to purchase as an investment, click the link at the top of the page at www.reidiamonds.com. And finally, if you have certain questions or topics you'd like discussed on a future episode, or if you have a guest suggestion, somebody that you'd like me to reach out to and invite on the show, you may contact me by clicking on the Contact Dan link at www.reidiamonds.com. I do personally check my own email, I send my own email, and I also receive that form notification there directly to my personal email account. And Audi 5, Dan Breslin here, and I'll catch you on next week's episode.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.